This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of August 15th, 2022, a week that began with great promise after finishing the previous week at the highs of the week. But none of that momentum could carry over. Unfortunately, some Sunday evening news out of China that they were cutting their interest rates led to dollar strength that would continue all week long and really was unrelenting and led to what ended up being a pretty lousy week. But we didn't know that back on Monday. In fact, on Monday, we didn't even have a podcast at TF Metals Report. Instead, we had what we call a special podcast, where from time to time we interview a CEO in the mining sector. And on Monday, I spoke with David Garofalo, who is the CEO of Gold Royalty Corp. Prior to that, he was the CEO of Gold Corp, into the merger with Newmont Mining. So David's certainly been around the precious metals industry for quite some time. The full interview is available on the TF Metals Report homepage. I suggest you give it a listen. But for now, here's just a snippet of what we discussed on Monday, August the 15th. I see some of the names you're working with here from Barrick and AEM and First Majestic and Yamana and Coeur and Gold Mining and down the list. There's probably, it's a diverse portfolio, but there's probably two or three that kind of stick out as your crown jewel. Can you tell us a little bit about them?
Well, interestingly, you're right. We're 100% in the Americas currently, but 75% of the value of our business is in Nevada, Quebec, and Ontario, which are the three best rated jurisdictions in the world in which to operate a mine for mineral potential, low political risk, and low regulatory risk. And so, yeah, we have some concentration, but it's in the best jurisdictions and some of the best assets in the world. We have a royalty on Canada's biggest gold mine, Canadian Malartic, and its underground extension, Odyssey, in which Agnico Eagle and Yamana are investing $1.6 billion currently. We have a royalty on what's going to be Canada's second biggest gold mine, Côté Gold, in Ontario, which will be starting up in early 2024, operated by IAMGOLD out of Canada as well. And then finally, we have a royalty on the underground extension of the U.S.'s biggest gold mine, Goldstrike. It's called Ren, the underground extension of Goldstrike. It's currently an open pit mine, but they intend to mine an underground extension that has a grade that's 7 times what they're mining in the open pit. And they've already delineated a large resource there, and they're drilling it out aggressively. And they're going to grow that resource and then integrate into the mine plan in the short to medium term. So those are 3 examples among our 200 royalties. So it's not just about quantity, it's quality, because those 3 assets in particular have multi-decades of reserves. So there's a foundational annuity element to our portfolio that's the envy of every other royalty company in the sector.
On Tuesday the 16th, the rally in the U.S. dollar continued as it was back above its 50-day moving average. You remember last week it had fallen below, and it looked like it was breaking down. But on Monday, it surged above, and Tuesday, it continued higher, and that continued to pressure the COMEX digital metals. All right, so then here you go. Moving toward one universal chart, as we've maintained for years. Get a load of these. We'll start with the dollar, because in August, with nobody around and the machines ruling the day on light volume and just simply tracking things like the dollar is the one that is hurting us the most this week. Turned around on Friday. Of course, we had a good day Friday in the metals, but this week has been all about the dollar, surging back above its 50-day yesterday and extending almost to 107 today before falling back. 106.85 was the high. So it looks like there's some indecision, maybe some trouble at 107. Maybe it will fall back tomorrow. Chart looks like perhaps it could come back down and try that 50-day again. 105.85 means it'd have to pull back another 50, 60 cents from here. So that would be beneficial for us. But again, look at this chart. Notice how it's been trending higher using the 50-day as support. Wednesday the 17th brought the minutes from the most recent FOMC meeting, and we were quick to notice that though gold had pulled back, it was still well above the level that it was at when those minutes were released and the FOMC meeting concluded 3 weeks earlier. But the chart is breaking down as the dollar moves higher and gold is back below its 50-day moving average. There are some key support levels coming up at 1780 and 1760, and that was part of what we discussed, again, on Wednesday the 17th. And finally, just to update you on gold and silver, the daily charts, because, again, they look terrible. I'm not going to try to tell you that they don't, where they look like, hey, this is great, Friday. Got above the 50-day, held it as support, moving to new highs, looked like we were ready to roll on Monday. Going to get through 1820, go to 1840, maybe even 1860, and instead, straight in the shitter, down $40 instead of up 40. Back below the 50-day Monday, and now each of the last 2 days, today and yesterday, going up, tapping the 50-day and getting reversed lower. Looks terrible. Fell below 1780, got back above briefly this afternoon. Almost looks for certain that it's going to 1760. And then from there, 1740. I mean, it just looks terrible. Now, again, the only thing I would tell you, see a little purple arrow I put on here? 3 weeks ago today. That's the day of the July FOMC. Now, it's showing you the COMEX close, but then the big candle wick hanging out the top is the Globex trading, okay? Anyway, we were COMEX closed that day about 1736. Globex closed like 1756, then we extended from there. So we are still, versus that day before Powell started flapping his gums, we're $40 higher, 2.5% higher in 3 weeks. But that doesn't change how terrible that chart looks. Of course, it's not just gold and silver at TF Metals Report. If you're going to follow the precious metals, you got to follow just about everything, from Forex, the bond market, to equities, you name it. So we also check in on other commodities. Of course, crude oil is important, but also is copper. They don't call it Dr. Copper for nothing. And so on Thursday the 18th, we took a look at the copper chart, wondering where it was versus the metals, noticing that it was pressing up against its 50-day moving average, but wondering if maybe it was just going to fail like gold and silver did. So we'll continue to watch it closely in the days ahead. And again, it was a topic on Thursday the 18th. Haven't checked in on copper and crude yet this week. Well, let's start with copper. Well, that chart looks amusing, does it not? Copper riding its 50-day moving average all the way into April, plunging below. Then there was that one day in June where there was some hope, not only for copper, but for everything. Because copper surged, huge day, like 7%, up above its 50-day. And we thought, okay, if copper now is going to go higher, it's going to lead the metals back. And instead, copper immediately reversed and closed back below it the next day, and then plunged from 450 down to 320. And now look what it's done for the past, 6 days? Just, hardcore pressing up against the 50-day moving average. If copper can get above its 50-day and get above those highs last week and then get above 380, okay, there'll be some hope for the precious metals in the short term. But how does this chart not like gold and silver, which got up to their 50-day, actually managed to get above, only before being smashed back below on Monday and now falling further? But anyway, we'll watch it. And on Friday, August the 19th, the U.S. dollar index continued to soar, up more than a half point again today, up more than 2.5 points on the week, and posting its highest weekly close since 2002. This is creating a whole host of problems across the emerging markets, the equity markets, but also the commodities. And that dollar strength all week, up every single day this week, caused the metals to fall every single day this week. It was just a terrible week after finishing the week last week looking pretty good. Gold down $53 on the week. Silver down $1.64. That is just awful, about 8%. We'll see what next week brings with some more economic data and, of course, Jerry Powell's appearance at the annual Jackson Hole Down next Friday. We'll just see if the dollar can be stopped, because if it can't be stopped, we're going to continue to feel pressure in the COMEX digital metals. You can be certain of that. Thank you for listening to your TF Metals Report podcast highlights. A reminder, a daily podcast is just one of the benefits of being a member of TF Metals Report. It's only about 50 cents per day. and it is a fantastic online community. Please check us out. Go to tfmetalsreport.com/subscribe for more details. Have a great weekend, everyone.